With me on the desk, I've got Johny Lambridis as well. He's not on the desk, he's down in Cape Town, and Hein Kruger is on the desk. Gentlemen, just picking up on what Cesar was saying there, mining and manufacturing, do you think this could be where we see a corporate default potentially going forward?
Well,
Hein?
I think when we look at the strength of the rand, that's bad for those sectors, and it puts a huge pressure on us. And it is true there's always a good side and a bad side to a strong currency, but I think at the moment the South African economy is suffering because of the strong currency, and especially in those sectors.
Could we see a default in manufacturing, potentially mining, as a result of the stronger rand and the havoc that is wreaking on these sectors? Johny, sorry.
It definitely is a possibility. I mean, what we have seen of late is a number of sort of forced rights issues. So SuperGroup's an example. So, they haven't defaulted on their debt, but they've had to raise quite a lot of money from the equity holders. So we could have a position where the banks just renegotiate and force these companies into rights issues, as opposed to have an actual default. If conditions got very difficult and the bank weren't able to sort of finance everybody, then of course we could just have a default in mining or manufacturing. But it's likely that we just have more rights issues.
Quick comment from you, Johny, on FirstRand's share price, 17.70. We're down 2/3% today. Is this one that you would be putting your money into?
We've been watching FirstRand. It's come off in terms of its price to book rating relative to a lot of the other banks. The statements today at the AGM mirror very closely what was out in the annual report a couple of weeks ago. So it's sort of not major news coming through, but it's not one that we're currently invested in, no.
Hein, quick one from you.
Yeah, no, I agree with Johny on that.
South Africa's biggest construction company, Murray & Roberts, expects a 15 to 20% decline. That's in its first half headline earnings per share, and as the economic downturn limits the flow of new contracts. It said trading conditions were tough for its engineering cluster in Southern Africa due to reduced industrial and mining activity and delays, of course, due to Eskom's power program. Murray & Roberts, which also operates in the Middle East, said its order book remained unchanged at 42 billion rand through the although the international project pipeline was showing signs of growth. Johny, earlier you mentioned Murray & Roberts. Let's get your views on this one.
Yes, I mentioned that sort of headline earnings would be down 15 to 20% for the first half. The first half last year, they did have a discontinuing loss of around 10 cents. So in our view, the sort of HEPS from continuing operations could actually be down 18 to 23% for the first half. I think the results probably worse than the market expected, but that's been a stock that's been under pressure for a number of weeks now. I think it's down about 20% in the last 2 months. So people obviously getting a bit concerned about the full year earnings. I think consensus was looking for down about 6% for the full year. We're looking for something slightly worse, but we'll probably see sort of expectations being ratcheted down on that side. And obviously Eskom plays quite a big part there, so all the trouble that Eskom's been having is obviously weighing on sentiment towards Murray & Roberts.
Over the month and over the year, down almost 11% at 51 rand. Is it exciting at these levels, or are you heeding caution on construction in general?
Yes, in general, I'm a little bit worried about that. And then again, they've also mentioned that although the offshore activities is more robust than in South Africa, they sit under pressure because of the rand.
South Africa's biggest food and liquor wholesaler, Massmart, has forecast a drop. That's in its first half headline earnings per share due to continuing weakness in consumer spending. The owner of Game and Macro chain stores said total sales for the 21 weeks to November the 22nd rose 4.9%, while comparable sales fell 0.7%. The company is saying that the stronger rand will also impact earnings from the 14 countries it operates from, that in sub-Saharan Africa. Year to date, sales inflation was 3.4% compared to 11.5%, with food prices entering deflation. 86 rand 20 the close on Massmart today. We up over the year more than 7%. Johny, down to you in Cape Town. Massmart, your views specifically on this retail stock?
Massmart's not a stock we own. I think they're struggling at the moment, obviously, with food inflation sort of trending down quite quickly, but the cost line in terms of wages and energy costs rising quite quickly. I think a lot of the retailers are going to probably have not a great Christmas, so we're a bit cautious on some of the retailers, other than obviously your defensives like Pick n Pay.
And of course, Hein, the retailers have run relatively hard since the lows that they hit in June.
Look, we had fantastic times to buy, and as Alwyn said also just now, we hit a bottom which was overdone, and we picked up there, but then it ran quickly past the level where I think it should be. And just to put you into the position where retailers are in South Africa, if you take the people who live on the interest of the investments, they've someone who earned 10,000 Rand a year ago earns now 5,900 out of the same investment. But his food, which would have cost him maybe 3,000 Rand, which was a third of his income a year ago, would cost him now 3,900 Rand, which is over half of his income. And that goes directly through to the retailers.